Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we are going to look into the trend load indicator. Alright, the name is quite funny though. It's a trend load. It's a lot of trends, right? So this indicator aims to show you the direction of the trend. Okay, if you are a trend following fan, if you love to trade in the direction of the trend, then you are going to find this indicator quite interesting. And although the indicator can be quite effective, it does not guarantee profit. All right. I'm going to add the indicator to the chart right away. It's a custom indicator, so you need to download the indicator from an external source and add it to your indicators library before you will be able to use it on your chart. Okay, so this is what the indicator looks like. All right, this is what it looks like. The indicator is quite easy to interpret. Okay, it doesn't exactly, complicate things. It's quite straightforward. Whenever you have the blue lines, simple, shows bullish momentum. When you have the red lines, very simple, shows bearish momentum. Okay, so how do you get signals? How do you know when to buy? How do you know when to sell? I'm going to recommend making use of trend lines, making use of horizontal support and resistance zones, just to add a layer of confirmations to whatever signals given to you by the trend load indicator. Okay, so this indicator, like I said, helps you identify direction of the trend, and gives you insight as to whether you should stay in a trend longer or not, right? So when you have an increase in the length of the blue lines or blue bars, it shows that there is an increase in bullish move, right? The bullish move is valid. It shows that the bullish trend is still ongoing. But when you have a sudden change of color from blue to red, it's a time to exit your buy trade. Okay, so whenever you find a blue bar form in a bullish trend, I'm going to recommend using this indicator only in trending markets. Okay, so whenever you find the indicator present a blue bar in a bullish trend, you can go ahead and enter a buy, especially if the signal came when the price is around a support zone. For example, you can see that this trend line came really, really handy. There was a confluence here. The trend line was giving us a buy signal because price was bouncing off it. At the same time, this horizontal support was giving us a buy signal because the price was bouncing off it. And at the same time, the trend load indicator was giving us a buy signal with the aid of these blue lines or blue bars. So this would have been a great place to enter a buy trade. After entering a buy trade, you can consider waiting for the trend load indicator to display a red line before you exit your buy trade. Okay, so once the red bar forms, you can just proceed to exiting your buy trade, or you can decide to use resistance levels to confirm your exit, or rather to exit your buy trades. Okay, you can use resistance levels as your exit strategies. All right, now on the other hand, whenever you have a red bar form in a sell trend, okay, it's a sign to enter a sell. All right, so when you enter a sell, you can then, when you enter a sell, you can then proceed to watch out for price movement within that sell trend. Okay, so you don't necessarily need to exit when there's a pullback, especially if you're a swing trader. But if you're a scalper, you can exit at the site of pullbacks and continue in the direction of the trend, right? But if you're a swing trader, you can just ride the trend till the end. So whenever you have the red lines consistently sloping downwards, as you can see, the bars are decreasing. It shows that the sell trend is strong. All right, it shows that the sell trend is strong. And then when you finally have the bar get to the minimum, it shows an oversold condition. Okay, there could possibly be a reversal soon, right? Because the bar has gotten towards the minimum level. Okay, so in the case of a buy, when you have the bars get towards the top of the indicator window, at the topmost level, it shows an overbought condition, and you could possibly see a bearish reversal. All right, so pay attention to all those. They are very important things to note. All right, now whenever you are in a trade, watch out for the slope, right? The slope of these bars. If you have a gentle slope, you can comfortably stay in your trade. Okay, you have a gentle slope that is not exactly wavy like, right? Not much waves. You just have a gentle slope like this. You can see how this bullish move went so smoothly, right? You can see how this bullish move went so smoothly upwards from here to here. This gentle slope shows that the trend is smooth. All right, so you can just enjoy the trend. But when you start seeing something like this, seeing some waves like this, it shows that there could possibly be a consolidation. All right, so it's better to just stay out of the market when you notice such waves. Okay, as you can see, we had consolidation around here. Right, you can see this was initially a sell move and it changed to a buy, but the bars were still short, and then this was a consolidation market. But when the bars began to increase in length, we finally had a breakout, and this would have been a good opportunity to enter a buy after the breakout has been confirmed. Okay, and then when you enter a buy, you can set your stop loss below the breakout point, for example, perhaps below here, and then you can set your take profit at resistance zones, or you can wait for the red bar to form. Okay, so you can actually use this indicator for trading breakouts, or you can trade in the direction of the trend. You can use it for trend following strategies or for breakout trading strategies. All right, whichever kind of strategy you are using, make sure you always observe good risk management. Make sure you always trade in the direction of the trend. All right, and make sure that you do not risk more than you can afford to lose. Okay, do not risk more than 2% of your account balance in a single trade, and ensure you always observe good risk to reward ratios. Okay, I recommend a minimum of 1:2. So if you are risking $1, your potential profit should be at least $2. Right, so that even if you have equal number of wins and losses, you are still going to be on the winning side. Okay, so it is very, very important. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you don't miss out on more trading videos like this. In the meantime, thank you for watching, and I wish you a very happy trading. I hope to see you in the next video.